cryptocurrency has become a focal point of discussion in the financial world, especially in light of the current political and economic climate in the United States. As traditional markets face volatility, inflation, and regulatory inquiries, many investors are turning to digital assets as an alternative investment strategy. In today's video, we will explore the benefits and drawbacks of investing in cryptocurrency, considering the political environment under President Trump administration. And if you stay till the end, I will give you my favorite 5 cryptocurrencies to invest in for a long-term, high-risk, high-reward investment strategy. But first, we need to talk about the regulatory environment surrounding cryptocurrency in the US. Recent actions by the Securities and Exchange Commission, SEC, and other regulatory bodies have raised questions about the future of digital assets. The SEC has been particularly active in evaluating various cryptocurrencies, leading to a climate of uncertainty for investors. This regulatory scrutiny is often influenced by the political landscape, where different parties have varying views on how to approach cryptocurrency. For instance, some politicians advocate for innovation and the potential benefits of blockchain technology, while others express concerns about consumer protection and the risks associated with unregulated markets. This political divide influences public perception and can impact market stability. As regulations continue to evolve, investors must stay informed about the potential implications for their investments. The US economy is currently grappling with ever-changing tariff policies from the Trump administration, high inflation rates, and rising interest rates, prompting many investors to seek alternative assets. Inflation has eroded purchasing power, leading individuals to look for ways to preserve their wealth. In this context, cryptocurrencies are often viewed as a hedge against inflation, attracting those who believe that digital assets can provide a safeguard against economic instability. However, the Federal Reserve's recent decision to maintain interest rates, rather than lowering them, has further complicated the economic landscape. By keeping rates steady, the Fed aims to combat inflation, but this decision also affects borrowing costs and consumer spending. Higher interest rates can lead to reduced liquidity in the market, making it more challenging for investors to access capital for investments, including cryptocurrencies. This environment can create a sense of urgency among investors to explore alternative assets that may offer better returns. However, the volatility of the crypto market can be daunting, especially during economic downturns. When investor confidence is low, the prices of cryptocurrencies can fluctuate dramatically in short periods, leading to significant gains or losses. This volatility can be particularly challenging for new investors who may not be prepared for the rapid changes in market conditions. Before we continue, if this video is helping you out, go ahead and hit the like and subscribe button. It lets YouTube know that this is worth sharing. And if you want more of this style of videos, turn on the notifications. Thanks. Now let's go back to the video. Investing in cryptocurrency offers several advantages that make it an appealing option for many. One of the most significant benefits is the potential for high returns. Historical data shows that major cryptocurrencies like Bitcoin and Ethereum have experienced exponential growth since their inception. Early investors in these assets have often reaped substantial profits, which continues to attract new participants to the market. Another advantage of cryptocurrencies is their ability to enhance portfolio diversification. Unlike traditional assets, such as stocks and bonds, cryptocurrencies often exhibit low correlation with these markets. This means that when traditional markets are underperforming, cryptocurrencies may still thrive, providing a buffer against losses. For investors looking to create a balanced portfolio, adding cryptocurrencies can be a strategic move. Accessibility is another key benefit of investing in cryptocurrencies. The market operates 24/7, allowing investors to buy and sell assets at any time. This level of accessibility, combined with the increasing number of exchanges and platforms, makes it easier for individuals to enter the market and participate in trading. Moreover, investing in cryptocurrency also means investing in technological innovation. Blockchain technology, which underpins most cryptocurrencies, has the potential to disrupt various industries. Innovations such as decentralized finance, or DeFi, and non-fungible tokens, known as NFTs, are reshaping the financial landscape, creating new opportunities for investors to explore. Now, despite the potential benefits, investing in cryptocurrency comes with considerable risks that cannot be overlooked. One of the most significant drawbacks is the market's inherent volatility. The prices of cryptocurrencies can experience extreme fluctuations, leading to substantial losses for investors who are unprepared for the market's ups and downs. Historical examples of market crashes serve as a stark reminder of the risks involved. Additionally, the regulatory environment surrounding cryptocurrencies is filled with uncertainty. The lack of clear regulations can create a precarious situation for investors. Changes in government policy or regulatory crackdowns can have immediate and severe impacts on the market. For instance, if a government decides to impose strict regulations on cryptocurrency exchanges, it could lead to a decline in market confidence and a drop in prices. Security concerns also pose a significant risk for cryptocurrency investors. While blockchain technology is inherently secure, the platforms and exchanges that facilitate cryptocurrency transactions are not immune to hacking and fraud. Investors face the risk of losing their assets due to security breaches, phishing attacks, or the failure of exchanges. Therefore, it is crucial for investors to take proper security measures, such as using hardware wallets and enabling two-factor authentication. Finally, the lack of fundamental value in many cryptocurrencies raises questions about their long-term viability. Unlike traditional investments, many cryptocurrencies do not have underlying assets or cash flows to support their valuations. This speculative nature can lead to bubble and potential losses for investors who do not conduct thorough research before investing. Okay, if you make it this far, these are my recommendations. Given the current landscape and the desire for lower volatility, higher returns, and greater stability, here are 5 cryptocurrencies that stand out as potentially strong investment options. Bitcoin, often referred to by its ticker symbol BTC, is the first and most well-known cryptocurrency. It has truly established itself as a digital gold. With a limited supply capped at 21 million coins and widespread adoption, Bitcoin is considered a relatively stable investment compared to other cryptocurrencies. Historically, Bitcoin has shown resilience during market downturns and is frequently viewed as a hedge against inflation. Ethereum, or ETH, is much more than just a cryptocurrency. It's a platform for decentralized applications, or dApps, and smart contracts. Its versatility, along with the growing ecosystem of projects built on its blockchain, contributes to its stability and potential for growth. Ethereum has consistently been one of the top performers in the crypto market. Plus, its transition to a proof-of-stake model aims to enhance its scalability and sustainability. Cardano, known by its ticker ADA, is recognized for its strong focus on security and scalability. Its unique proof-of-stake consensus mechanism, combined with rigorous academic research underpinning its development, makes it a promising investment. Cardano has gained significant traction in the DeFi space and is seen as a competitor to Ethereum, offering lower transaction fees and faster processing times. Chainlink, or Link, is a decentralized Oracle network that connects smart contracts with real-world data. Its utility in the growing DeFi sector and partnerships with major companies enhance its value proposition. Chainlink has shown relatively lower volatility compared to other altcoins, making it a stable choice for investors looking for exposure to the DeFi ecosystem. Polygon, or MATIC, is a Layer 2 scaling solution for Ethereum that aims to improve transaction speeds and reduce costs. Its growing adoption among developers and projects seeking to enhance their scalability makes it a strong contender in the crypto space. Polygon has demonstrated resilient and consistent growth, making it an attractive option for investors. If one decides to invest in cryptocurrency, it is essential to adopt strategies that minimize risk while maximizing potential returns. First and foremost, educating oneself about the cryptocurrency market is crucial. Understanding the fundamentals of different cryptocurrencies, their use cases, and market dynamics can empower investors to make informed decisions. Diversification is another key strategy. Instead of putting all funds into a single cryptocurrency, investors should consider spreading their investments across multiple assets. This approach can help mitigate the impact of poor performance from any one asset and reduce overall portfolio risk. Investors should also only invest what they can afford to lose. Given the high volatility and risk associated with cryptocurrencies, it is essential to set limits based on personal financial situations. This approach helps protect overall financial health and reduces the emotional stress of market fluctuations. Using a dollar-cost averaging strategy can also be beneficial. This involves investing a fixed amount of money at regular intervals, regardless of market conditions. By doing so, investors can reduce the impact of volatility and lower the average cost of their investments over time. Finally, securing investments is paramount. Investors should prioritize the security of their cryptocurrency holdings by using reputable exchanges, enabling two-factor authentication, and considering hardware wallets for storage. Taking these precautions can help protect investments from theft and fraud. What is my takeaway? Investing in cryptocurrency presents both opportunities and challenges. particularly in the context of the current US political and economic environment. The potential for high returns, diversification benefits, and technological innovation make cryptocurrencies an appealing option for many investors. However, the risks associated with volatility, regulatory uncertainty, and security concerns cannot be overlooked. The Federal Reserve's decision to maintain interest rates, coupled with the economic implications of tariffs imposed during the Trump administration, has created a complex landscape for investors. As inflation continues to rise and economic conditions fluctuate, cryptocurrencies may offer a viable alternative for those seeking to preserve their wealth. But by understanding the landscape and employing sound investment strategies, individuals can position themselves to benefit from the potential of digital assets while mitigating associated risks. The recommended cryptocurrencies, Bitcoin, Ethereum, Cardano, Chainlink, and Polygon, represent a balanced approach to investing in this dynamic market. As the cryptocurrency market continues to evolve, informed decision-making will be crucial for success. Ultimately, a balanced approach that combines caution with a willingness to embrace innovation may yield the best results in this dynamic and rapidly changing market. If you found this video helpful, make sure to hit the like button. It really helps the channel grow. And if you want more clear, no-nonsense personal financial advice, don't forget to subscribe and ring that bell so you never miss a new video. But tell me, are you currently investing in cryptocurrencies? And if you do, what are your favorite coins?